Welcome back to the TNT Podcast, where we spark real estate conversations that set you up for success. I'm Tyler Peroni. I'm accompanied by Tanya Vandenberg, my co-host, and we are going to start with the big news coming out of Ottawa, which is CMHC changes. So I'm going to get Tanya's opinion, I'm going to spark my opinion, and we are going to see what's going to come in the future.
I don't know. Do you think we're going to agree, or are we going to disagree on these?
I don't know.
Questions.
Let's find out.
Okay. What's your first question, Tyler?
Okay, so big CMHC changes, two large changes actually. So let's start with the CMHC insured mortgages. Do you think, obviously, so for the people listening, CMHC has upped their mortgage insurance from $1 million. So if you bought a $999,000 house, you can get CMHC insured mortgage. If you bought at $1 million or $1,001, you could not get insurance. So it was a difference between putting 5% down and putting 20% down. Now they have upped that from $1 million to $1.5 million. So I would like to know your opinion on whether you think that's going to change anything in Sudbury.
Yeah, so I mean, Sudbury, probably not. I don't think it's going to change anything here because, we were discussing this before. Our average home sale price here is still probably about sub $500,000 approximately. It varies month to month, but $1 million is quite a luxury property in our neighborhood, and certainly in other jurisdictions it's going to be different. So certainly in the big markets where your average home sale price is $1 million plus, they are going to have an increase in affordability or an increase in buyers who can then purchase a home because they're not subject to that 20% down payment cap, right? So Sudbury, I don't think it's going to change too much. I feel like if you're stretching yourself to buy over $1 million, you probably already have 20% or more to put down, hopefully do. Mm-hmm. But I think for the larger markets, where $1 million is your average bungalow price, then it's certainly going to have a bigger effect on, first-time home buyers getting into the market who don't necessarily have the cash to put down into that property.
Yeah, I don't think anybody in Greater Sudbury is putting 5% down on $1 million house. It's, your second or third or fourth home that you're buying that is $1 million. So I don't think it's going to have many changes. Obviously, with the big centers, Toronto, Vancouver, where, that's your average price. Mm-hmm. Obviously, it's going to help first-time home buyers get into those markets. But in Sudbury, I don't think we're going to see many changes for that. Yeah. The second piece of news, which I think will have a little bit of a bigger effect, amortization. Now for first-time home buyers, moving that from 25 years to 30 years. So stretching out those payments, obviously so I worked out the numbers earlier, on a $450,000 mortgage, or a $450,000 house, I should say, with, your average down payment, it's going to change your payments, your monthly payments, about $130. Okay. So for most families, that's, big enough, especially when you're buying in that, $450,000 range. So I think that's going to have a greater effect on affordability. Obviously, it's going to allow people to get pre-approved for more money as well. So I think it would help our market. What do you think?
Yeah, I agree on you on that. I'm surprised we're not disagreeing here at all. No, I totally agree with you. I think that certainly when you look at the households that are buying your average, first-time home buyer home, usually these people are maybe newly out of college or university. They have a bit of that underlying debt, or they're just starting their family, so they're going to have higher payments for like daycare costs, car loans, that type of thing. So having that savings monthly, not necessarily savings, but that lower down payment monthly of say $150 to $200 on your average home, that's going to help them afford the daycare, the car payment, maybe paying off their student loans. So I think there will be probably a lot of first-time homebuyers, especially taking advantage of that increased amortization, especially now that we are in sort of a higher interest rate scenario right now. Once interest rates start to go down a little bit more, the payment necessarily will go down as well. So maybe they won't be taking advantage of that 30-year amortization, but certainly, for your average first-time home buyer, or, young people starting out with families are wanting to have families, they're already paying so much every month for all the extra costs of living, including, you know, groceries, transportation, and daycare. Yeah. So I think it'll really help a lot of families to be able to do that, increase amortization.
Yeah, I think so too. It's kind of like, you know, back in the day, you could, when you bought a car, you could only amortize it over, you know, 60 payments, and now we're up to, you know, 96 payments. Should you be doing it? Probably not.
Maybe not on a car. No.
But obviously it's helping, you know, families get into vehicles and now houses, you know, extending that a little bit. I think, my opinion is, it's a little bit short-sighted on the government. I think they're obviously trying to help those bigger centers, but there is most of the country that aren't big centers. And I think when you're talking to, or when you're hearing these economists, you know, with their predictions, they're predicting the interest rates coming down another 1.5 or 2% before the middle of next year. Wow. So I think with the amortization, when I think the interest rate drop, so it's going to get back to low 2s, and then a 30-year AM, I think we are going to have another COVID market next year. That's my prediction. If everything comes to fruition and actually happens, I think next year is going to be crazy with price increases again.
Yeah, I think, like you said, if you have people that many more buyers in the market, you have lower down payments, lower monthly payments, and lower interest rates, certainly you're going to have more people purchasing. And that's exactly what we saw in the run up, you know, to COVID, you know, during the COVID period, where everybody wanted housing, and housing, I mean, the housing cost wasn't necessarily cheap, but it was cheaper than renting. Your loans, their mortgage loans, were at record low prices, and it just really created this boom in the market for demand when we didn't have the supply to meet that demand. So really the question is, where's the supply going to come from, right? Like, if we have this increase in demand, great affordability, sure, I would love to see mortgage rates come down, but I don't necessarily know if it's going to help first-time home buyers if that results in home prices continually increasing. You know, if we see another 10-15% increase in home prices because of this surge in demand, where is that going to leave the first-time home buyer getting into the market? I think we're going to be up where our average home sale price is $550 or more. And I don't know if that necessarily solves the problem. So like you said, I think it is a little short-sighted in terms of the government. And
I think they would have made should have made one, you know, bring the interest rates down. If that's still not helping, then, you know, let's look at amortizations. But it's almost like the left hand is not talking to the right, and they're like, oh, we're going to do this, and we're also going to do this. So I think it's going to be kind of it's the perfect storm for another, you know, house price increase for next year. So it'll be extremely interesting to see. And I think going back to the kind of inventory part, we're still low on inventory. We're still in a low inventory market.
And I don't think we have very many builders building that sort of affordable home. We see some semi-detached homes in the sort of like $550 to $580 range, you know, new construction being built, but we don't see a ton of those being built. And we certainly don't see anything being built that's in that $450 to sub $500 level, right? I mean, I think that's the sweet spot that we're kind of missing for the first-time home buyer. And, you know, hopefully, and it takes time. That's the unfortunate thing, is that it takes so much time to build houses that we really need now for there to be, I think, an increase in, you know, maybe some incentives for builders building smaller homes, more affordable homes, townhomes, kind of that missing middle where first-time home buyers can purchase something that's, you know, not a complete fixer-upper, something they can move their families into and still afford.
Well, for decades, it was, you know, the life cycle of real estate: first-time home buyer, move up, and you know, downsize, or, you know, get a retirement home, whatever it would be. But we're not seeing like that circle is not closing. You know, boomers and retirees are not moving out of their houses, and they're not going to retirement homes. Some of our industry partners that we talk to on, you know, a monthly basis, they have vacancies in retirement homes for the first time in a long time, and I think COVID kind of scared people out of moving out of their homes. But I think that's a huge segment of the market, that's
portion that could meet that demand, right? It could be a good supply.
First-time home buyers don't have that, you know, little house because their retirees are staying in their houses longer. So I think that's kind of the missing piece of this whole cycle. As soon as those, boomers start moving out, I think it's going to open obviously more opportunity for first-time home buyers. But I think until that happens, we're going to be low on inventory unless we, for some miraculous reason, we start building houses again. But obviously with development charges, with all the red tape, it's becoming more and more difficult, and it takes a long time, and it's expensive. So they can't sell houses for the average price anymore.
And you talk about boomers moving out of their homes, right? Let's say they own a bigger home, just a home they've been in for 20, 30 years. Yep. A lot of them don't, like you said, don't want to necessarily move into retirement homes because of that scare of COVID, being in that community, being at increased risk for illness. There was a little bit of a push to do some senior housing. We've seen a little bit of senior housing being built, like in Isilda and certainly in the Valley and Hanmer area. Yeah. We've seen these homes that are, mostly slab on grade, or some have a small basement for storage. I think they've been in quite high demand as well, but the price is a little high, I think, for some seniors to move into. But certainly that has helped, I think, fill a bit of that gap for seniors moving out of their homes and into something that's right size, something that's not too big, not too small, convenient, close to amenities, and in a neighborhood they're familiar with.
Yeah, and I think those are great. The builders that are building them are doing it the right way. They look great, and they are accessible. Mm-hmm. But I think multi-generational housing as well is the next step as well. And we saw that in all the major metros. Now they're building the laneway housing and stuff like that. But I think having multiple families under one roof, or multiple sections of the family under one roof, is definitely going to be another, especially with the bigger houses that builders are building these days. I think that's going to be an opportunity as well.
That's a good point. Maybe we should talk about like laneway houses, tiny houses, and like infill houses kind of next time. Yeah. Because I think that's a whole other opportunity for increasing housing, increased densification in the city center, and keeping people close to amenities, and like you said, multi-generational housing where you're building another house on your property, maybe for your kids or maybe for yourself to move into in retirement.
Sounds good.
Yeah.
So next episode we're going to talk about those?
Perhaps. I don't know.
So thank you all for tuning in, and I guess we're going to talk about laneway housing and ADUs on our next episode. Thanks again.